What a move. What a day. Well. Back to work tonight, guys. Wednesday evening. Hope you guys made some money on Wacky Wednesday. It definitely was a wacky one, wasn't it? But now we're getting ready for Thursday's trading session. Got a lot of great trades setting up on our radar for Thursday. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. As always, before we jump in and get this party going tonight, we're going to cover in tonight's video. Make sure you subscribe to our channel that we don't miss tomorrow night's video upload. And as always, if you guys enjoy the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get ready for Thursday. There are some great trades setting up here for what could be a thirsty Thursday trading session tomorrow morning in our trade room. A lot of ranges on the charts here tonight. You'll notice we got a range on the Nasdaq, range on the S&P, range on the crude oil. You know me, right? I love ranges. We're trading failures. We're trading rotation. We're trading maybe some breakouts. I can definitely see some possible head fakes setting up for tomorrow. So I'll tell you, there'll be no shortage of tradable, reliable, profitable opportunities in all three of these markets here tomorrow. Now, speaking of tomorrow, tomorrow's a Thursday. Let's make sure we're on the same page before we jump into each of these charts tonight. Tomorrow's a Thursday. We get Jerome Powell back on the microphone tomorrow, but he's probably not the big news for tomorrow. As we mentioned in last night's video, Powell, of course, Jerome Powell, the head of our Fed, has a two-day testimony, right? Today, of course, and tomorrow at 10 o'clock. I would not expect that 10 o'clock a testimony to be nearly as dramatic as it was here today. If I had to guess tomorrow, the big news for tomorrow will be that PMI composite flash number at 9:45. Again, markets will be caring about Powell, but I doubt they're going to give very much emphasis on him tomorrow because he'll basically be repeating the same thing that he said here today on Capitol Hill. So we got some big news tomorrow. Don't worry about the jobless claims. The oil report isn't until 11 o'clock, later on in the morning. Really the big potential market moving catalyst tomorrow, at least in my eyes, is that 945 PMI number. That's an inflation number. And as we heard all day out of Powell's mouth today, inflation, keeping all the options on the table, blah, 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 right? We've all heard this song and dance. So tomorrow, 945, that's the big news for tomorrow. Keep that on your radar. We'll, of course, have our trade room opened up at 8 o'clock Eastern time tomorrow, and we'll definitely front row seat for that news report before 10 o'clock Eastern time. Back to our charts here tonight, though. Boy, I got a lot to cover here tonight. Boy, now, guys, whether you trade one of these markets or you trade all of these markets, you're going to learn something new throughout the entire video here tonight. I'll provide different trade variations, different setup tactics as we get deeper into this video. And remember, I always try to save the best stuff towards the end of this video, so I'll give you a reason to stick around all the way to the end. All right, we'll go Nasdaq, S&P, and then cruise, of course, the oil. Let's jump right in here to the Nasdaq here, or of course the micro Nasdaq or the QQQs. I have students right now trading the Nasdaq, the micro Nasdaq, the QQQs with either directional options or trading the shares. Any way you want to use this stuff here for tomorrow. We have a bull market right now, but as you can see, the bears they're right there kind of banging on the door here, trying to take control of this market. There are in my eyes, three basic clues that tell me how we should trade this market here tomorrow. Three kind of keys to success. The first one is that strong move. Now you'll notice, right, anytime we see a strong move in one direction, we know the odds are pretty good. We're going to get a retest of that high, and you'll notice we haven't retested that high yet. Okay, that's one very big clue. So we can definitely see buyers, right, definitely try to buy that dip, but they haven't quite accomplished their objective, as we say, and that's always a very big clue for us. The second clue here is the buyers still have control. Now, I get it. We got lower highs, we got lower lows. It definitely looks like the buyers failed to retest those highs, but in my trade room, at least in my world, I use the moving average. This is the 21 EMA. I use the moving average to tell me who has control. So for example, see how the buyers are jumping off the moving average right there, right? See how the buyers, they pull back and they jump and they jump. Okay, that's a bullish momentum. I call that buyers having control. Now, when the buyers take control of the market, it's now up to the sellers to take control from them. And we assume the market is still bullish until the sellers take control. And you'll notice every time we get underneath that moving average, the bears were unable to jump off the moving average. Now, as I mentioned earlier, we're right there, right? The bears have a great shot to jump off that moving average, and they can certainly take control of this momentum. But as you can imagine, though, in a bull market, if the sellers begin to struggle down here, what do you think is going to happen, right? We can run some stops and then finish off that retest off the high. And that brings kind of the third piece of this puzzle, which is that trading range. And ranges act like magnets. And of course, we're using that range as a magnet. We're using edges or levels of support below that range, edges of resistance above that range. Those are kind of the key areas for entries and exits in a trading range. You can see I've also measured the amount below that range, and that kind of gives me an idea of where these buyers, in addition to that retest of that high, where they might be trying to go here, that 1175 and a quarter area as we go higher. You can also see too here on the chart, right? Not the most important thing. You can definitely see we have a measured pullback, one leg, two leg. This is a very interesting spot here right now. Again, we have the bears knocking on the door. The bears have everything they need right now to take control of this market. But as far as I'm concerned, the buyers, they still have that little bit of the edge here right now. And so buyers would love to buy this move back up to retest those highs. Buyers also could possibly get a big slingshot breakout going higher. We talk a lot about these ranges and how in a bull market with a range, when they go underneath that range, bam, this thing could really launch and rip higher here. So buyers have opportunities to buy into failures. They can buy breakouts going higher here. Buyers have lots of options here as we go. Sellers right now, the sellers also, they do. You know, if the bears can take control of this and go lower, I love the idea of finding some of those grinding channels and running this market lower. I definitely think those bears would love to take out that big move down low that was kind of interrupted by the Powell speech here this morning. So we definitely have potential here for the sell side as well. We're just going to wait and see what we get here in the next couple hours here. So how do we buy it? How do we sell it? Where are the easiest trades here right now? Well, as we go higher, if we go higher here, one thing we're looking for here is we know there's we know there's a little bit of bearishness going lower. We can anticipate sellers are going to be trying to sell down here. So my favorite kind of strategy for buying when technically the buyers have control, but we're a little bit more bearish would like to be is to use stops. We need some sort of catalyst to get this thing back up and moving higher here. And there's no better way to do that than to let those bears try a couple times as we go higher. I like to use, whenever I have a lot of concern about momentum and I'm still trying to be a buyer, I like to use these two try failure patterns. And I like to think about, okay, where are the stops for those sellers? And basically we just simply target those stops, right? Buying into those stop losses. We use those stops as fuel to run this market higher here. Now, there's a lot of different ways we can take this two try failure. One of my favorite ways is a trap entry off of that low. Again, bears try once, bears try twice, grab that trap entry for that run going higher. Or sometimes what we'll do is draw a trend line off of that low, bears once, bears twice, nice strong signal, right? And we're buying it as it goes higher here. I like that two try failure coming off of that low. And then as we go higher here, this is really where we get really quite a few different options here. Think about those bears now trying once, trying twice, and now imagine this market really shooting and running higher. We know the market wants to retest that high. If we can get through that high here and start to really push through that high. Here's a couple different breakaway or breakout setups I would definitely keep on your radar for tomorrow. For example, if we pull back to that moving average and jump off that moving average, that of course becomes what I call a 1, 2, 3 breakout. Again, we do want to see this thing really push through that high of day up there and really push higher. Once we get that, then I can mark up a high trend line. I can bring it down off that low, and I like to go in and look at prior swings like this and grab that first pullback off the low of that channel. Now, this could be a trap setup, it could be a failure setup, it could be a pullback off the moving average, right? You learn that stuff inside the free trading course, right? On our website, trap, right? Failure and pullback combo. That is a fantastic kind of slingshot as we go higher here. I also think too, bears once, bears twice, we pop up. One of my favorite kind of breakouts is that pop and grind. So now it kind of pops up and it starts to kind of flutter, right? And flutter higher there. See that? It's different than the 1, 2, 3 breakout, which kind of pulls back and jumps. This one pops up and starts to grind higher. These are really easy. Draw the trend line right off that high, bring it down to that big low now, and then again, I always like to kind of look left, find some of those prior swings, and my goal is always to get down below a prior swing, but at the very least, get underneath the moving average. And then what I can do is try to trap in some of those bears. Once they get short off the moving average, we can use their stops as fuel, right? The easiest money you're going to make in a bullish trend like that is to trap in the bears trying to get short. Because if you can buy into their stop losses, it's just an easy, quick first target, move that stop to point of entry, and just trail with our 2-candle trailer. Again, this could be a failure, it could be a trap, it could be a pullback combo. We want to get that off of that channel. And guys, remember, we'll take any of the entry setups we can find that you guys learn in the free trading course. Which reminds me, I know most of you guys have taken the free class, the free course on our website. You've learned all about these entry setups. You know how to use them in different market conditions. And most importantly, you know when to sit on hands to avoid losses, right? I get so many great emails every week right now, you guys using this stuff on your own account, off the free course. But listen, if you're here for the first time, if you haven't taken the free classes yet, if you haven't learned the setups yet, definitely grab, I'll put a little link up here for you in the upper right-hand corner. If you hate missing the best trades each day, or you're sick and tired of taking so many losses, or you're trying to transition from working full-time to trading full-time, that roadmap I teach in that free trading course will get you right back on the right track and start getting some better results in your trading. That way, the next time I say breakout into 1, 2, 3 breakout, you'll know what entry patterns we're using here to buy those first pullbacks, or you'll know exactly what a 2-try failure looks like to buy off of that low. Here's a question for you. Here's a question. Can I sell off that high? Right? What do you think? If we go all the way back and retest that high, right? Can I sell off this high right now? I definitely can. How would I sell off that high? Well, what's the problem? Momentum. Yeah, momentum is the big problem. So if we end up back at these highs right now, momentum is going to be a big deal, right? Because not only are we bullish, but now we're slingshotting higher. Again, I like that breakout a little bit better. But if I wanted to sell this, what would it look like? We'd have to use that 2-try failure, but it'd really have to be a good one. We call these crown reversals. Now, we still want to let the buyers try twice, right? Let them try once, let them try twice. But when you get into a situation where you're really going against all the momentum, you really need to get a trap entry for that entry, right? I can be a little bit more aggressive down at the bottom of bull range with a 1, 2, and back up. When I'm trying to sell off the high of a bull range, I really do want to get that trap entry off that high, because you have to remember, as the market goes lower, there'll be more buyers coming in trying to buy it up, right? So you can't chase it going lower. You've got to get that trap entry. A great example right here, right? We go up into resistance. Buyers try once, buyers try twice. You see it right there? That's the exact same setup that we would want to see over here, right, at that high. Again, not my favorite trade because it's already a bull market and we're already going to try to punch out of that high, but that's something we're watching for that short coming off that high. Now, speaking of the short side, I mentioned this earlier. If we do end up going lower here, there's a couple really easy options. So, for example, the bears they're right there. They can easily take control of this market right now, and they definitely want to go bury that last week's close, maybe back into that 11,250 magnet down there. But they have to hold this pullback, and they have to jump off that moving average, right? If they can hold this pullback and jump off that moving average, now I'm looking for a short, right? And it's a trending market at that point. We love to use channels, so I'll draw that trend line off that low. And what I'll usually do is I'll play around with either that high or that high. Oftentimes you'll get a better entry off a bigger high up there. I call these hidden channels. And again, the goal is very simple. Once we get that 1-2 jump, right, that 1-2-3 breakout, then we simply don't chase it, find that low, mark that channel off that high, and then find that first pullback off the high of that channel. And again, these could be traps, failures, pullback combinations, any of the setups we talk about in that video course. Where does the market want to go? We know where it wants to go. It wants to take out that 320 half level, that prior week close as we go into Thursday and Friday is always a big psychological magnet. And of course, speaking of magnet, we get a range down there that'll definitely be a big objective. If it really pukes, we've got this big old range back down here, 11,100, right, would be kind of the pie in the sky, right? 11,067 would be kind of the jackpot number there for those bears tomorrow. But for right now, though, back to those lows, seems like a very, very reasonable objective here for those bears. I also think, too, a pop and grind would also be a great short on this as well. So now we start to kind of grind down. We're not jumping down, but we're kind of grinding down. That's an easy giveaway. Just simply draw that trend line off that low, bring it right up around that high, and again, go, okay, where are my prior swings? Let's get above some of those prior swings. Let's get above the moving average, because again, when you get above the moving average, you can trap in those buyers, and you can use those stops as fuel. Here's an easy short if it does pop and kind of grind as we go lower. I've got a couple more shorts I want to talk about here tonight, a couple more longs too as well. So we'll definitely cover some more of this as we go deeper into this video, but that should get us going here. Again, will we get these bears to struggle and give us a stop run back to that high? Will they slingshot with that breakout going higher, or will the bears come in, stop them in their tracks, and right back down off that high again? That will definitely be some fun tomorrow morning in our trade room. Let's go back to the S&P now. Over on the E-mini, the S&P, you can see, is also bullish here tonight, and we have a slightly different twist on this. You can see, first things first, one thing that stands out on the S&P, and you'll notice a very big difference here between the S&P and the Nasdaq, is the S&P made a strong move up, but see what happened? They pulled it right back, and what do we always say? Mission accomplished. So strong move has been hit. We call these open loops in our trade room. Open loop has been filled. And now we're pretty much sitting right back at that low, because that's exactly what you'd expect. A strong move up that retests that high. The question at that point is, do they keep going higher with a breakout? Do they pull back? And if they do pull back, they'll go back to that prior low. At this point right now, you know what's going to happen next, right? Either the bears are going to struggle and we're going to get sucked right back up to that high, or the bears are going to go, hell yeah, let's do this, right? And run this thing back down to retest those lows. Those are the two scenarios right now that we have to be thinking, all really based on this bullish trading range, right? And it all kind of begins with strong move up, they retest, they don't keep going through, they pull back. The natural tendency is to go back to the lowest point of that pullback, and then this starts to turn into that trading range, or it turns into kind of a double top reversal and runs back down again. You can also see too here, I've also got a hidden channel on this chart. You might call this a spiking channel if you wanted to kind of stretch that term a little bit. It's a hidden channel. I love to draw trend lines off the higher highs, bring them down to those lower, that kind of the medium point there between the two. And then this is usually a really good spot here to look for some buying opportunities here, right? Kind of like a hidden channel here. I like that spot a lot. And again, just like on the NASDAQ, I hate to be the bearer of bad news here. This one's even more bullish, right? I mean, the NASDAQ, look at the NASDAQ. The NASDAQ has a lower high to, NASDAQ right, has a lower high to it. So NASDAQ definitely has a little more bearish to it, but it's still not, they still have not taken control here. The E-mini, of course, you can see here has quite a bit more bullishness to it. Now, you could easily argue, we're rotating off the high, right? We talk about how when markets rotate off the high of a range, momentum builds. So absolutely, the bears definitely have it on a silver platter. This is theirs for the taking right now. All the bears have to do is give me a nice strong punch going lower, and they take control of this. And I would imagine all the buyers are going over here. They're gonna step aside. This market should have a pretty easy job going back to that 3,700, back down to that low at 93 and a quarter. That's the big objective here right now. But look at the clues, though. Look at the clues, right? The buyers are jumping off that moving average, right? And then look what happens. They pull back underneath the moving average. The bears try to sell short. What happens? Yeah, failure. Right back up into that high. Now here we are again. We pulled back the moving average. The bears have tried here right now. Okay, will they succeed, or will this thing fail and snap back up and go back to those highs again? That is the dance. That is the drama that is unfolding on this chart right now. So really, this is another example where buyers would love to buy off this low. Buyers would love to buy a slingshot breakout, right? I mean, this is what dreams are made of for a buyer, right? We go up, we rotate down, and if it can punch up the top, because again, we're already a bull market, right? So it can easily just pop right through that top up there, and you can see those big levels up top, right? This is that prior gap down, right? This is that prior high after that big gap down, right? Big targets on both the NASDAQ and the S&P are back to fill those gaps from not this week, but last week, right? The beginning of last week, before that Fed announcement came out last week. So we know the market wants to go all the way back up to reach those levels, and this range here right now could definitely give it a boost to make that, right, to make it happen. So we definitely want to keep an eye on that here. So we got buyers, good shots there. The bears going to have a hard time selling this if it goes back to retest this high. If it goes back to retest the high, this will be a tough one to justify, because at this point, again, we're making higher highs. I like that short a little bit better on the NASDAQ. I'm not a huge fan of it on the S&P because we are, again, so clearly seeing higher highs and higher lows. But as a seller, though, if we can get this thing to go lower, yeah, now I think we definitely have some options here, right, for that run going back down to retest those lows here. So a lot of this will be very similar here to the NASDAQ. I love the idea here right now of a 1, of a 2, maybe get that trap off of that low, right? Either way, though, get those bears coming in, get them trying twice, get some trend lines, get some traps coming in, and get those failure setups here, running all of those stops as we go. And then again, think about that slingshot. If we start to really punch and go higher, do we pop up? Let me go back a little bit for us here, right? Do we 1, 2, and then pop up, take out that high? That's where the buyers want to get to right now. And then think about now, as the market rolls over here now, we pull back, we jump off that moving average. That's a 1, 2, 3 breakout. We mark off that high, we mark off that low, right? Find that hidden channel, as we call it. Find those prior swings. And again, we're looking for whichever entry setup we can get here off of that low. It could be a trap below a prior swing, or a failure below the moving average, a pullback combination off the EMA. They all work, right? They're all going to work there for us as we go. Remember, an easy way to find an exit target on these is the first leg and the third leg. Okay, the first leg and the third leg. What will oftentimes happen is, like, for example, if we see, for example, the 1, the 2, the stops get run and we pop up and then grind, right, which is slightly different setup there, pop up and grind now, right, different breakout. If it pops and grinds, mark off that high, mark off that big low, and again, we're buying that first pullback off that channel low. Where, again, we know kind of where the market wants to go, that 43 level, let's call it, as we go higher here. But think about, though, that first leg and that third leg. That'll give you an idea of kind of really how to fine-tune those final exits on there. I would definitely take some profit off at that 42.90 or 42, 43 level there. But, if you have an extra contract on the SPY, right, extra contract on the micro E-mini or something like that, I wouldn't be afraid to leave that for that third runner target as we go higher here. I like that one. I like that one a lot. I also would keep an eye on here if the market was to, let's say, for example, we get a 1, a 2, and then we just rip, right? The market just rips and runs higher. Watch out for those. This will also apply to the NASDAQ as well. Watch out for that strong pop, that shallow pullback, and that higher high in price. Strong pop gets that momentum going. Shallow pullback drives all the traders crazy. Higher high in price confirms the move. Right? It basically confirms it's not just a V-top back into that range. And then we know everybody wants, they're all going to gobble up those longs off of that trap low. We call these 2-try traps or 2-try breakouts. They're very easy setups. The key, though, is promise me. Remember, it's not the lower high. It's the higher high that you want to see. And you notice, too, that you could also lump us into it right now. Strong move up, relatively shallow pullback, higher high in price. If it wasn't, 6 o'clock Eastern time right now, this would be an easy giveaway, right? That is the same type of setup we have setting up right here, or potentially setting up as we go. Keep those on your radar as we go higher here. And then, of course, as we go lower, unfortunately, same thing as the NASDAQ here, right? If they hold this pullback and blast going lower, that'll be your 1, 2, 3 breakout going lower. We're going to find that new channel, mark those trap highs. Again, I love traps. You'll see a lot of examples of traps in that free trading course that I mentioned. And if I haven't convinced you to take that class yet, you'll thank me for that. There's hundreds of examples of failures and traps and pullback combos of how we apply those setups to our favorite futures markets in that free course linked up in the upper right hand corner. That's a great short right there. Or they pop and they grind down. We find that channel. Again, find that hidden channel off those big highs, find those traps, find those failures, right? And we're trying to go back down to retest that low. Pretty simple idea here as we go. And then again, we know those bears want to take out that retest. All right, we're looking pretty good there on the S&P and the NASDAQ. I think we got that pretty well covered here tonight. Not a lot of differences there between the S&P and the NASDAQ. I love this potential for a slingshot breakout going higher here. Let's wrap things up here on the oil tonight. Oil is probably the more challenging, I think, out of all three of these markets here tonight. Definitely the one that kind of leaves the most kind of unsaid or unconfirmed here right now. And I think you'll see why I say that here in a moment. First things first here, the first kind of key to success on this, it's a bear range with a bullish reversal. You can see right now, right, they make that strong run down. Everything collapsed overnight, right? Big move down. They toss around into a trading range. And you'll notice what happens on this. They break out that low. The bears come in off the moving average, try once, try twice, and it spits right back up. And you'll notice what happens. It goes for a pendulum swing. The amount we go below is miraculously held as resistance above. And one thing you'll notice about this is, besides the fact that we're now back inside that trading range, if you were listening to what I said earlier where, how do we know who has control of momentum? Because if you know who has control of momentum, then you know what side to focus on. So, for example, see how the bears are jumping, right? They're jumping. The bears have full control of that momentum at that point. But then look what happens. As it pops back up, bam, right? They jump off the moving average there. So technically, this is a bull market. This is technically a bullish market. Now, I get it. I get it. You can easily see here that the bears came in and kind of put the kibosh to that here, right around that pendulum swing. But remember, as a price action trader, my best advice is once you know who has control momentum, look for setups going with that direction. Remember, it's on the bears right now to show us they want control. Okay. Remember, a strong move down in a bull move like this does not give the bears control, right? Just like in a bullish market, a strong pullback does not give the bulls control. The bears control. The bears, they still have to go in and hold it and jump. That is when the bears take control of momentum. So in a bull market, for example, if I have a deep pullback, what do? Well, we're concerned about that strength of that pullback, so we let the bears try a couple times. We let them get caught up in their stops, and we blast it right back up again. So this is a really big part of this. Now, this could obviously turn bearish, right? Because it's clear the bears are holding off that pendulum swing. But right now, though, this is a bull market. Right now, it's a bull market. I'm sorry to break the bad news for all of our gas tank's sake right now. Next up, the hidden channel. If you understand kind of how to use the moving average here, you can easily see now, right? Love to draw trend lines off those highs, off that low. I mean, this is, if you're looking for a pullback after a reversal, they don't get much better than this right here. This is a very, very reliable spot for a pullback. Now, you could easily say, well, it's back in a range, and ranges are usually where good trades go to die. We don't like to be trading instead of ranges, so I got a plan to get around that here. But that's one, like I said, if you're looking for a good place to get long right now, this is definitely it. This is a very, very good spot for it off the low of that hidden channel. And then I also want to point something out. I want to give the bears some credit here right now. You'll notice not only did they hold the pendulum swing, but you'll also notice here that they also held that prior low, right? It's not yesterday's low. What is that? Last Friday's low. So you can definitely tell this is nothing more than a big bear move down, really a bullish pullback, a very bullish reversal pullback. And the bears, you can tell, they just threw the entire kitchen sink at that move coming off of that low. Now at this point, it's kind of, if you understand kind of those three components here right now we kind of have an idea of what to do with this. So the buyers, again, they've got a great spot right now to buy off of this channel. I think the buyers also have a great spot right now to buy the bounce off of that low. Because, of course, anytime we see a strong move in one direction, we expect a retest of that low. There's a range above us. So it makes perfect sense that buyers would love to buy the channel low, buy the range low. And also, too, just like on the S&P and the Nasdaq, if this thing slingshots and runs higher, this could be an easy rally back to 110, last week's close. So we definitely have some breakouts going higher here, maybe some runaway moves going higher there as well. On the sell side here, what do you think is the way we can sell this? Well, first of all, if we go back to retest this high, you can't sell that, right? Well, you can do whatever you want, right? But that is not a good short at this point, because now we have a definite trend line right here now, and now you want to sell in a bull market? No thanks, right? Not with a range above us. Last week's close becomes a magnet. So the bears, they've really got they don't look good selling into that 107.30 area. I think the best way to be a seller on this right now would be really kind of either finding one of those pop and grinds as we go down. That is an attractive short right now, right? Because that will be something we can kind of get that momentum back for the bears. Or I think also too, a 2-try trap off the high of a new channel. It may not be the pop and grind. I think that is also a valid short here. We just have to make sure right now, as the biggest challenge we have for the bears right now, for sellers, is that we don't have control of this market yet. So naturally, we have to go lower to confirm control. But the lower that we go, the less desirable these trades become. Why? Because there's no money to make anymore on this, right? Unless you, of course, you have a crystal ball and you know we're going to go back to, we don't know that though yet. All we know right now is the big objective is back to 101.53. That's all we know for sure right now. We don't know it's going to keep going lower than that. So as it goes lower and earns our trust in the short, it becomes less desirable because, again, the risk-reward ratio starts to fall out of whack. And so when you start to get this stuff going too low, that is precisely where traps become very, very valuable. So keep that in mind here as we go. I really, really, really like if we can get these bears trying once, trying twice, get those stops to get hit with that same two-try failure. I think that stop run could easily end up popping up, could turn into one of those 1, 2, 3 breakouts, right? That blast off the moving average, find that channel off the high, buy that first pullback, right? You could easily see this stuff setting up, right? So 1 try, 2 try for the bears. It's a bull market. The bears think they get an easy one back to that low. We got a channel here though, bullish reversal. So I like that. I like that 2 try failure to get that trigger long, run those stops going higher, and then 1, 2 pop, and we grab that first pullback off the low of that channel. Those are pretty easy trades here. I also think too is if we can go 1, 2 pop and grind, right? Easy. Find that channel high, find that low. You get the point, right? Same basic idea we've talked about here already as we go. Remember, first leg, third leg, that'll help give you a good idea of where that market wants to go. And also too, don't be surprised here if we go 1, 2, and then really pop, right? Real strong pop. And when it pops up like that, shallow pullback, higher high in price, that trap is just begging to be bought, right? It's just begging to be bought. It's just like this one right here where it pops up, right? Pops up, shallow pullback, higher high, trap right there, right? Just begging to get bought. So that's a pretty easy one. Then and again, I'm not a huge fan of selling off that high. If we go back to retest this high, I'd be very, very concerned as a seller at that point because momentum will really confirm at that point here, the buyer sell full control. As we go lower, I talked about this before. I definitely think that pull back. One thing to worry about here, again, is if we just blast and run down, it's almost like, sorry, we've kind of missed our shot on this, unfortunately. What I'd like to do is kind of the ideal scenario on this would be we go a little bit lower here, get that shallow pullback, that lower low in price, and then we can start thinking about, okay, where's that channel? Draw off of that low, draw off this low, bring it up around that high, and remember, the trap is the key. Again, we have to get a little bit lower to get the trust for the bears, but the trap will be the secret here for the good entry. That's what the smart money will be entering tomorrow, and then again, we'll try to take out that low, and possibly, dare I say, boy, who would have thought we'd be saying, oh, thank goodness, back to 100. Who would have thought that would be the relief or the reliefful price here in these markets right now? But hearing Biden kind of bumble around today about how it's everybody's fault, while it's like, good gosh, apparently they have no plan of whatsoever besides yelling at people to get these prices to come down here. Anyways, I'll keep my soapbox off the side of the video tonight. But that is definitely something I like as we go. Now, if we roll back to that low, right? If we roll back to that low, how do we buy it? How do we buy it? Now, in this one, remember, at this point, it becomes a very bear market, right? It's very important. This is not a bull market like we're trying to go 1, 2 and back up. Remember, I can be pretty aggressive when I'm bullish and trying to trap in the sellers. But when I'm bearish, because if we go back to retest the high, this is obviously a bear market now, right? This ain't a bull market anymore. If we go back to retest these lows now what do we need? We really want, well, here's what we want. We want either a crown reversal, which is that 1, 2 with a trap. Okay, 1 to the trap. Okay, now I love crown reversals because they oftentimes will punch. So what will happen is the bears will come in, they'll take out that low. The weekends come in, they try once, they try twice. All their stops, right? All their All their pain is right there, right? That's the key to this stuff. The easiest money you're going to make is when you're running those stops. And then what I'm going to do is then as it pops and runs higher here now think about where the market wants to go now. Okay, we've got our trigger off of that low. Now, where's the market want to go? It wants to go back and take out those highs. Okay, so now what you can do is mark off that high, right? Remember, draw that trend line off those highs, bring it down to that low. And if there's one trade you do not want to miss, it's this one right here. Okay, this really could be the best trade of tomorrow. Let those bears retest that low overnight. Let the weekends come in and grind off that low. Horrible spot to be selling. Use their stops as fuel. And then once it pops back up and we get that momentum shifting, remember, there's a range above us. We know that ranges love to swing, pendulum swing down, pendulum swing back up, and we can go in and grab that first pullback right as we go off of that low. I really, really like that kind of combination off of that low. And then how do we break down here? Let's say we take that low out, we pull back to that low, and we just blast, right? There's your 1, 2, 3 breakout. Mark that low, mark that high, find that first test off that low. I have another objective below 100. If we do get to 100 tomorrow, I would definitely expect to probably slide through that a little bit. 98.80 to 98.15 is my next key area. Below 100. We may also, of course, see the market go back to 100 and go sideways into a trading range. If we do go into a trading range, what do? We find levels of resistance above the range and we sell with buyer failures above that trading range. All right, you'll learn a lot more about ranges, how to trade failures, right, and rotation. You'll learn a whole hell of a lot more about ranges inside that free trading course. And obviously, we'll do this together tomorrow morning in our trade room. But that'll give you a really good kickstart to make some money on Thursday. And speaking of Thursday, what are you waiting for, right? Get involved. Come out and trade with me in the trade room. We open up every morning, 8 o'clock Eastern time. It's a great place to learn and trade along. Like I always say, if you put a little bit of effort into this with me in the trade room, ask questions. If you need help along the way, I have all the templates, the software templates. I have all the worksheets. Trade right along with me. It's a fantastic place to be. Great for a new trader, kind of getting a good foundation, or even better for an experienced trader who might not be able to put the pieces all together just yet on the right system here. So it's a great place to be. I'll put all the free course links to get started. I'll put all the membership links in the description of the YouTube video. I'll put it all below the video tonight on the blog. So definitely grab those links. Get registered. Don't be afraid to use the live chat. We got live chat here. You can always call the office. I'd be happy to talk more here on the phone or via Skype or via email. So don't be afraid to call or shoot us an email. And as always, thank you so much for watching here tonight. Hope you guys enjoyed it. Hope you make some money with this stuff tomorrow, 8 o'clock Eastern time in our trade room. If not, you better come back tomorrow night. We're gonna run it back and we'll do it all again tomorrow night and get ready for Friday's trading session. But guys, that's it for me tonight. Have a wonderful rest of your evening. Follow the plan for tomorrow. We'll see you guys there. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.